Okay, all right, Nigel. Thanks very much for that. So that's on NMDC. But let's focus on some more stocks in focus this morning. Bayer Crop Science and Sumitomo Chemicals are in focus after the centre restricts the use of a widely used herbicide glyphosate. Sonal is joining in to speed us up with the details. Sonal.
Thanks a lot for that. Well, yes, these two stocks will be in focus because of the news that the government has finally restricted use of a widely used herbicide, that is glyphosate. The discussions have been going on for last 2 years. That was the first time a draft notification suggesting that usage should be reduced had come out, and now it is final. This is an important herbicide which is used across the country for something in tea plantations, which is used to kill some of these pests as well. But now it will be applied only through pest control operators. In terms of what the report suggested is that already in some of these states like Kerala, Andhra Pradesh, Telangana, Maharashtra and Punjab, usage of this particular agrochemical is already banned. Now, how does it impact Sumitomo and Bayer Crop Sciences? It is because these two companies are one of the biggest producers of glyphosate in the country. How does it impact UPL? Well, glufosinate is used as an alternative to glyphosate. Usually when glyphosate usage goes down, glufosinate usage goes up, and UPL is one of the bigger producers of glufosinate in the country, and it provides a majority chunk of revenues for the company as well. So that could benefit. The stocks are up today, both Bayer Crop Sciences and Sumitomo, but there could be a longer term impact on volumes for these companies.
All right, we take that point. Sonal, hang in there because, you know, we do have a bunch of stocks which are buzzing around. On the previous trading session on Tuesday, we did see PSUs gain a bit, and now that buzz continues. BHEL, for instance, is at the high point. Bharat Forge doing well, not a PSU. We do have Container Corp as well, which is sitting at a gain of almost 4.5%. All the railway-related stocks were a buzz on Tuesday. But a bunch of stocks which are declining on the back of numbers. We have Philips Carbon as well as Chennai Petro trading with deep cuts in reaction to their numbers. Sonal.
They are. So let me start with PCBL or Philips Carbon, where it was a big margin miss. Yes, revenue grew 52%, but EBITDA declined 1%, leading to a margin decline of almost 600 basis points and profit decline of 4%. Now, the company in its conference call said that yes, volumes were impacted in Q2. It is largely because of capacity constraints. They do have a new facility coming up in December 2022, and the peak utilization levels for this particular facility will be reached in next 2 years. They have a sizable exposure to Europe. The total carbon black market has an exposure of 18 to 19%, and just for companies' exports, it's around 15 to 16%. So whatever we've been talking about, power shortage, higher power prices, that is something which impacted production in Europe for Philips Carbon, and hence the decline in margins as well. For Chennai Petro, it was a howler of a quarter, largely expected because GRMs had fallen down, the Singapore GRMs that is. This has led to a revenue decline of 16%, EBITDA down 93%, margins have come in at 1.2% versus 14.7%. There was a forex loss, there's an inventory loss because crude prices were down, and profits are down 99% on a quarter-on-quarter basis. Even GRMs for the company at $4.50 per barrel versus $25 per barrel on a quarter-on-quarter basis. So a big slide in the stock price as well.
Okay, all right, Sonal. Thanks very much.